You're watching Retirement Talk with Eric Kearney, Southwest Florida's retirement television. He's an author, a radio host, a fiduciary, and Southwest Florida's premier investment advisor. Here is Senior Investment Advisor Eric Kearney.
And welcome to Retirement Talk with Eric Kearney. My name is Cynthia DeFazio, and I'm joined today by Eric Kearney and Joseph Lanza of Retirement Wealth Advisors. Eric, how are you today?
Great, Cynthia. How are you?
Fantastic. Thank you so much for asking. Joseph, how are you?
I'm glad to be back, Cynthia.
I'm glad to have you back, definitely, because I know everything has been so busy for you both in the office. So thank you so much for always taking the time to come in and do the shows. It's a pleasure to have both of you here today. I want to talk a little bit today, if we could please, about volatility in the market, because obviously we've gone through such a tumultuous year, if you will, and it's so important to have a proper plan in place to help combat volatile times. So Eric, I'm going to ask you right out of the gate. We're going to talk about strategizing for today. How do you address volatility with your clients?
So I think volatility it's here to stay. It's been around, but it's here to stay. And so it's all about communication and talking with the client. It's a conversation before, during, and even after all of that volatility happens. What am I actually doing for you? What is our team approach? How are we being proactive? How are we actually tackling the volatility? And so now, Cynthia, more than ever, people want to know that they're confronting the volatility and that they're actually able to take advantage of it. And the one thing is that we've learned over the years is there's an emotional state of the market, and then there's the reality state of the market. So by actually talking about volatility, what we're really trying to do is reduce the emotions out of investing, because it's really the emotions that get people all worked up and panicked, and then they start to make bad decisions. You know, on a normal basis, we can be practical. We're very smart human beings. We can be practical. We can be smart. We can be proactive. But all of a sudden, when there's something tumultuous in our life, we start to make irrational decisions, poor decisions. And so this volatility really shouldn't be a big deal in your portfolio if someone's overlooking this, if someone's factoring this in as an issue. And what we're seeing right now is where there's a lot of advisory firms that are just dropping the ball. They don't know how to handle all of this. And we're seeing a lot of people out there that are frustrated, not only with volatility, but with risk, about being in interest rate sensitive investments that have gotten hammered over the past 18 months. So there's a lot of very unhappy people that don't feel like they're being handled or treated the way that their money needs to be.
And you hear a lot of people say that their advisors are hiding from them. They're not even answering the phones when it's something like that that's going on. Joseph, I want to ask you a question. How important is it to factor in volatility when you're designing a retirement plan for someone?
Well, making sure that we're factoring in volatility is crucial because we know it's going to be there. And when we're building your financial plan, we have to use an average rate of return in order to properly project the growth of your account. And now, it'd be nice to say you're going to earn this solid rate of return every single year in retirement, but that's not the truth. The truth is the market's going to have some very bumpy years. And timing is also very important. What if you decide to retire, and within those first 2 years of retirement, we see very poor returns from the market? Are you still going to be able to make it through retirement without outliving your money? Well, we can answer this for you, and as a matter of fact, we answer this for all of our clients with their financial plans. And I think this is why we've gained and retained so many clients, is because they love the reassurance and confidence that they have with their financial plans. And they know their investments, they understand them, and they know that they're strong, relevant ones. And I think that's what a client is truly searching for in an advisor now.
And most definitely, I'm assuming, Eric, also just looking for peace of mind, if you will, because like you mentioned, when you get up in the morning and you're checking your online account balance and you see that your investments have gone down, coming into an independent firm is so important. Can we talk a little bit about that before we open up the phone lines in a few moments?
Yeah, so Cynthia nailed it on the head. A lot of people look at their statements. That's how they grade their retirement. But look, what you really want to know is how is my advisor handling this? How are they handling the volatility? How much risk do I actually have in my portfolio? So we're taking a look at a lot of the ingredients inside that portfolio and really trying to figure out, how am I going to get through this? I understand and I get it. You look at it. Here's last month's statement. What am I valued at right now? I hate to say this, but your asset allocation is a very small part of the puzzle. What we're really trying to do is strategize through the financial plan, the income plan, the tax solutions, and so forth to get you through a long retirement.
Thank you, Eric. And Joseph, are you seeing a lot of people come in right now that are concerned about volatility?
I think so, and I think when they don't have that financial plan in place, people don't have a backbone of something to rely on to make sure that they're okay. Because when you have that plan that's so much more than a statement, that's truly telling you that this is bigger than just volatility. It's bigger than your rate of returns this year. This depends on your rate of returns over 5, 10, 15 years, factoring in your withdrawals, factoring in taxes, inflation. There's so much more to just investments or to your overall retirement than just your investments. And I think when you have a financial plan in place, you can really see that big picture a lot more clearly.
Joseph, thank you. And Eric, are those plans adjustable if someone's life changes? Let's say they lose a spouse, or they're forced into early retirement, or they just decide to retire early overall. How adjustable and customizable are those for life changes?
Yeah, so that's exactly the reason for financial planning. Again, I've said before and I'll say it again, we prepare for eventualities and probabilities. It's not when something's going to happen, it's just it is going to happen, right? We just don't know when. But things are going to change in our life, whether we want them to or not, and that's okay. In the financial plan, your foundation is already built. Your income plan is already built. There are going to be ebbs and flows. There's going to be volatile markets. There's going to be pullbacks and corrections. These are just normal things that are going to happen in the market. Believe me, I've been doing this for over 22 years. We've seen everything. And the other thing too is, Cynthia, is when you see all these different things that have happened in the market, how different these major events are. The tech wreck is certainly different than 9/11. 9/11 was certainly completely different than 2008. All these different market pullbacks and corrections, and now all of a sudden, you've had COVID, a worldwide pandemic. Think of how different all of those have been. And so you can't pull out the playbook from 2008 and expect to use it in 2023. These are different times.
Yeah.
And so you want to know that your advisor is on the ball, they're communicating with you, and they're actually taking this into account.
Well, Eric and Joseph, this is the perfect time for us to open the phone lines. Would you agree?
Sounds good.
All right. To our viewers at home, there's a number for you to call on that screen. That number is 800-779-1942. We know you're probably sitting at home today with a cup of coffee in hand and you're thinking about calling in. If you have any questions about if you're on the right track for retirement, this would be the perfect opportunity for you to take advantage of this complimentary consultation and find out. You have nothing to lose and everything to gain. And again, the number is 800-779-1942. This will be a complimentary consultation. We're going to take a very short commercial break. Don't go anywhere. We're going to talk more about volatility in the market when we return.
What does your retirement look like? Is it filled with travel, spending time with family, uninterrupted rounds at the golf course? Or are you too worried to even think about your hopes and dreams? Eric and his team can answer your questions with a complimentary review of your retirement and income plan, and it all starts with getting to know you. They'll do exactly that by going over your current strategy to expose the weaknesses that may exist in your retirement portfolio. Plus, they'll explain potential risks and possible strategies to you in easy-to-understand terms and help get you reacquainted with your portfolio and income strategy. Once they understand your retirement goals, objectives, and dreams, they'll work to custom build a retirement plan to help ensure that you cannot outlive your income in retirement. Because every dream needs a plan. Call Eric today and schedule your visit. You only retire once, so let's get it right the first time.
And welcome back to Retirement Talk with Eric Kearney. My name is Cynthia DeFazio, and I'm joined today by Eric Kearney and Joseph Lanza of Retirement Wealth Advisors. Gentlemen, a great show we're having today, talking about such a very important topic, specifically to our retirees in the viewing audience, market volatility. So Eric, oh my gosh, I'm picturing Chicken Little running with his, like, oh my gosh, the sky is falling, everything's going wrong. So my question is, when do you know that it's the right time to do something in a volatile market? How do you know when to move and how do you know when to sit still?
Yeah. So, Mama always said there's going to be days like this. The markets are going to pull back. They're going to correct. They're going to go through their little tizzy. It's going to be uncomfortable. But here's the deal. Before it even happens, let's go back and take a look at what a money manager is going to do. They're going to be proactive. They're going to say, how can we actually take advantage of this? You talk about Chicken Little running around a lot, right?
Yeah.
And there's a lot of advisors out there who are just hoping, I just hope the market comes back because I don't really know what to do. In 2020, one of our TV shows that we said back then was, we had a client come into the office and he said, Eric, I'm coming in here because I just asked my advisor, what are we going to do from this? And the advisor literally sat back in his chair and he said, I don't know.
Oh, wow.
And that client lost complete faith in his advisor.
Of course.
So let's take a look at volatility. What can we actually do? We can take a look at data points, data signals. We can take a look at raw research that's constantly coming in. We understand where the money is ebbing and flowing to. So if you're moving proactively into cash accounts and money market accounts, now all of a sudden we can let the market do what it does. It drops, it goes down. Now all of a sudden we can dollar cost average with the cash that we raised and allow your portfolio to live another day. Now what we're going to do is we're going to dollar cost in average positions, and now that client is buying many more shares at a lower price. Is the volatility a problem? No. But we also created opportunity for our clients. It's not always pretty. It's not always perfect. That's money management. But the thing is that our clients know that we're doing something. We're attempting to take advantage of that down market. And there's this almost desperate migration of new potential clients coming into us. And they're saying, Joseph, please help me.
Yeah.
I need help. Like, I have a feeling things are not going my way with the current firm that I'm in. And that's what we're seeing. So when people come into us, there is almost this desperation that they want help. And a lot of times people think, well, you know, you're no different than anyone else. Let me tell you something. We are independent. We're a fiduciary. We have a certified financial planning team that specifically does financial planning and income planning. We are significantly different than a lot of other advisory firms. And that's really what has separated us from everyone else.
Absolutely. Thank you, Eric. Joseph, I want to ask you a question. Can volatility be measured in a portfolio?
Yes, it can be measured, and it's most commonly done through standard deviation. And all standard deviation is a way for us to put a numeric value on how much your portfolio is being whipsawed up and down from its average rate of return. And we want to view this because it gives us another way to assess your risk. And once we have your risk, your current risk, we can see where it should be depending on your age or your current spending and income needs. We can also take into account your rate of return, because when you're investing in the market and you're taking on risk, you should be earning a certain rate of return for the amount of risk that you're earning. So when we're talking about the
I know exactly what you mean and where you're going with that. You're talking about measuring the risk in a portfolio. Because my question is, so often you're hearing people say, oh my gosh, I'm a moderate risk taker. So I wanted to dive a little bit further, Joseph, and ask you, how do you help identify if someone is lined up correctly with what they think their risk tolerance is?
Right, and it really goes back to the financial plan and discovering what their needs are and what their age is before we can ever determine how much risk they should be taking in the portfolio. And so everything kind of always falls back to that financial plan, and we're always relying on that, and that's what helps answers a lot of retirees' questions once they get to that stage in their life.
And does that change through someone's life? Do you know, Joseph, like, do you become a little more less risky? Is it ever age correlated, I think is what I'm trying to ask you.
Yeah, a lot of times it is, and different situations come up throughout our lifetime, and that changes our financial plan, right? There's so many different variables in life that arise and can change your financial plan. So we have to keep in account for these, and that's why the financial plan is like a living, breathing person. It's not just a written one that you get and it goes on your shelf and it stays there forever. Right. This is a living thing that changes depending on market volatility, what the current investment landscape is looking like for you, your current needs. As you get older, that's going to change as well. well. So it all depends on the person's current situation.
Okay, Joseph, thank you so much. Eric, I have a question for you, obviously. These can be such emotional times. And I go back and forth and I think about people that sit in front of the news all day. And so the people that watch the news all day from like morning until night, they're afraid to leave their house, right? They're so nervous. So my question is, how do you manage emotion during times like these? What are some of the best strategies that you can use?
Number one is, again, having that conversation. Let's talk about volatility. Let's talk about your emotions. Let's see how you actually feel about this. And what's interesting about volatility, if you're talking about financial volatility, you're actually talking about emotions. But if you're also talking about financial emotions, you're also including volatility in that conversation. So the bottom line is that we have to be aware of that. Here's the interesting thing. For everybody that watches the news out there, here's the crazy part. If the stock market goes up 1%, it's barely even talked about on the evening news.
That's true.
Not a big deal.
That's
right?
true.
But all of a sudden, if the stock market drops 1%, the complete opposite of what it did, now all of a sudden it's almost written in bold caps. It's a big deal. The stock market dropped 1% today. It's almost written in blood. The asymmetry is tough to avoid. So there's a lot of people who are glued to the TV. I don't care about that. I want to know about your situation. I want to know about your financial plan. I want to know about your income plan. I want to know that you have longevity, you have sustainability, and you can get through this volatility. That's what we're built for. And the whole thing is that we didn't create this whole financial planning team, this strategic planning team. We do tax planning. I mean, we're very strategic. It's built for times like these. And like I said, we're working with a more affluent customer. We're working with a more affluent, successful person that is more demanding of their financial needs.
Sure.
And that's really what we're looking to surround them with.
Joseph, I should ask you a question as well. How often can your clients expect to hear from you? Do you send out newsletters that are quarterly, that are weekly? Is it kind of based on what's going on in the news to give them peace of mind? How do you gauge that?
So we send out videos to our clients through email, and this can be depending on what's going on in the current market. If things are very volatile, then they can expect to receive more of these email videos. If things are a little bit more slower pace and volatility has kind of calmed itself, then they may not receive as many. But we're constantly keeping in touch with the clients and letting them know if there's any changes to their portfolios. They're constantly meeting with Donna, their financial planner, in order to review anything that changes in their financial plan. So we want to make sure that communication is there, and any updates in their life we're made aware of just as much as we're making them aware of how and many updates they have in their investments.
Joseph, thank you so much. Eric, if someone is in the viewing audience today and they're unsure about picking up the phone, maybe they're hesitant for whatever reason, what advice do you have for those folks?
My advice always is don't be overwhelmed by your current financial situation. Really, don't put this off. Don't procrastinate. There's a lot of times where we can turn around a situation much easier than people expect. So if you're out there and you feel kind of like you're in a financial no man's land, give us a call today. Let's get that free consultation done, and we'll see you soon.
Eric, thank you so much. Joseph, thank you so much. This is the perfect time for us to reopen the phone lines. Would you agree?
Agreed.
All right. To our viewers at home, the number to call is on your screen. That number is 800-779-1942. We know you have a lot of questions today for Eric and Joseph about how to plan your perfect retirement. They have the answers for you. They're offering you a complimentary consultation. Perhaps you're not taking the right amount of risk. Perhaps you're taking too much risk, or perhaps you're taking too little risk for what you want to do with your retirement years. This is the perfect opportunity for you to come in, to sit down with Eric and Joseph and let them design a plan that's suited to your needs. Again, the number is 800-779-1942. We're going to take a very short commercial break, but don't go anywhere. We have more about dealing with market volatility when we return.
Retirement Wealth Advisors, your investment providers.
What I enjoy most about retirement planning is sitting down with you and having real conversations about your retirement dreams and goals. We specialize in helping people just like you prepare for the retirement they've always dreamed of.
Retirement Wealth Advisors with Eric Kearney.
Hey, Southwest Florida. Thank you so much for watching Retirement Talk with Eric Kearney. While we've had a lot of fun doing the show, and we always appreciate your comments, more importantly, we've been able to help out an awful lot of people meet their retirement needs. And believe me, I get it. A lot of you watching today are just as frustrated with the financial industry as I am. But at Retirement Wealth Advisors, we have a completely different experience. By license and law, we're looking to put your best interest first. So whether it's a financial plan that you're looking for, you're out there in a financial no man's land, or you're truly looking for a second opinion, please pick up the phone and give us a call today, and let's get that conversation started. And remember, strive for excellence. Your wealth deserves it.
And welcome back to Retirement Talk with Eric Kearney. My name is Cynthia DeFazio, and I'm joined today by Eric Kearney and Joseph Lanza of Retirement Wealth Advisors. Gentlemen, a great show we're having today, talking about a scary topic for a lot of people, market volatility. And of course, I can understand that. So Eric, I have a question for you, actually. Can volatility ever be used to an investor's advantage?
I actually enjoy it. So here's what's fun about volatility, right? People are like, oh, you're on volatility, right? Here's the fun thing about it. If you're prepared for it, if you're ready for it, now all of a sudden you can actually spruce up that portfolio. You can do some remodeling, you can rejuvenate it, you can get rid of some costly fees that have been in there. So a lot of times when we meet with a new client, they're coming in and they're like, look, my advisor's not paying attention to my volatility, here it is. I'm like, oh, this is a great opportunity to update this portfolio, make it much more relevant. And the bottom line is that when I take a look at a portfolio, I want to understand what it's trying to do. You know, are you trying to grow it? Are you trying to get income? Do you want growth in income? Are you trying to protect the principal? What is your objective with this portfolio? And that portfolio really does have to tell you a story of what you're trying to accomplish. The problem is that we're seeing a lot of people come in and I'm like, I don't get the portfolio. And a long time ago, I used to say, oh, we'll do this report and we'll go through this. I don't waste anyone's time right now. Now I say, look, there's some issues in this portfolio. Or if someone's portfolio looks really good, I tell them this is actually a pretty good portfolio. And so a lot of times people will say, I still want to work with you. That's great. But a lot of times we do have to make some major renovations to that portfolio. So I actually appreciate volatility because it gives you a lot of opportunity to change that portfolio.
Eric, thank you so much. Joseph, I have to ask you a question. Do tumultuous markets lead to poor decision making for clients? What are your thoughts on that?
Yeah, well, we've seen this in the past. A lot of times clients end up falling into the trap of selling low and then having to buy high again later when it comes to investments during volatile times. This, of course, is the exact opposite of what every investor wants to do, which is buy low and sell high. So a much smarter question to ask yourself during volatile times is, are my investments still corresponding with what the market is showing me? Do they make sense in today's day and age? Or do I have any destructive positions that are doing me more harm than good? Because on the other side of panic selling is actually holding on to irrelevant positions for far too long because you're afraid if you sell them, you'll never be able to recover. So you want to aim to not overreact or underreact, but rather make sure your portfolio is updated with positions that fit well in your financial plan and can lead you to a good recovery.
Joseph, thank you so much. Eric, I want to ask you, how can creating a strategy to hedge volatility become like a safety net for clients?
So a lot of times what people want to do is they want to understand how to get through an event. And if it's not volatility, it's going to be inflation. If it's not inflation, it's political risk. If it's not that, it's market risk. So a lot of times what we're doing is we're saying, look, how can we reduce your risk? How can we reduce your volatility? How can we actually protect your income? There's a lot of different things that we can do. And again, we're forecasting all these decisions. People aren't very comfortable at making a decision now that's going to affect them in 5 or 10 years, but we are. So now what we have to do is we have to communicate, we have to define why we're actually doing this. And now all of a sudden that client is actually getting excited. Okay, now I have a plan. I'm not going to have to worry about volatility. I'm not going to have to worry about risk. All of my income is covered. We've created a floor of income. We've reduced your taxes through Roth conversions or different other ways. We've been strategic. This is all done on purpose with the financial plan. And it's actually very exciting to me because when we lock the doors at night, I know that our clients are going to be okay. No matter what happens tomorrow, next month, next year, we've planned for this. And that's the part, again, it's very self-fulfilling, but it makes me feel better when I go home at night because we put so much effort into that client.
Joseph, I should ask you a question as well. Eric just mentioned, of course, the importance of having a plan in place for retirement. How long does it take you to design a plan for your clients?
Well, it really depends on somebody's situation. This could take up to a couple days to a couple weeks. But really, we like to brainstorm as an office and all come together for one, especially when some of these cases that require a lot deeper level strategies. And I think that's one of the most rewarding things about this job is I get to work with Eric and Donna, and we come together, and it's like putting together a puzzle piece, but it's somebody's financial life. And because new tax codes are always coming out, we're thinking about new strategies we could do with that. We're looking at Roth conversion strategies we're doing. And then Eric and I also look at the investment side of what's currently going on in the market and where can we invest these clients' funds in order to best suit them. So I think I love the part of this job is because it's like putting that puzzle together, and it's so rewarding when you finally get to present that to a client and they can see how much work you truly put into that, and they really appreciate that, and moving forward with that and seeing it work in real time is very rewarding.
Yeah.
Absolutely. Well, Eric, let's talk a little bit more in detail about the pieces and parts of the plan, because Joseph just mentioned taxes, and I know a lot of people think about taxes and perhaps they're going to go down in the retirement years. Let's talk about the different pieces and how important is it to focus on taxes specifically?
Right. So do you think that our national debt is going to go way up more, stay the same, or go down? Well, it's not good. I mean, unfortunately, the national debt is going through the roof. Where are they going to get that money from? Right now, the biggest pile of money out there is from the baby boomers' IRAs. So that's why the Secure Act came out. That's why the Secure Act 2.0 came out. And there's still a lot of new people that are coming into our office. And I asked them, has your advisor explained the Secure Act? Has your advisor explained Secure Act 2.0? And people sometimes know the very basis of it, but they don't know the inner workings of it or how they're going to come after your money once you pass away. So tax planning is huge for us. That's why we have a CFP. Joseph's actually becoming a certified financial planner as well. We have a strategic CPA firm. We have an estate planning firm that we work with. We are surrounding ourselves with people who are able to handle all of our clients' money. And people are demanding of this. They want to understand that we're considering all this. Today we're talking about volatility, but there's so many other things in that portfolio. Volatility is that much of your entire financial plan. It's a small portion of your wealth management in your portfolio. There's always going to be other things that we have to worry about. So if it's not volatility, it's going to be something else, but we've already considered that.
Eric, thank you so much. Joseph, if someone is in the viewing audience today and they're a husband and wife sitting together, how important is it that they come in for that first consultation together as a couple?
I think this makes a huge difference. We want to make sure that every client is on the same page with one another. And a lot of times when I'm speaking with folks over the phone or maybe that first meeting and I say, hey, it'd be nice if you bring in your spouse for the next meeting, they're like, I really handle all the resources and the financial stuff. And it's nice when you have those different dynamics of a relationship, but when we're building out a financial plan, we want both people to be on board with exactly what's going on. It can prevent a lot of messes from happening when both people are on the same page and they know exactly what's happening with the strategies we're implementing.
Well, Joseph and Eric, thank you so much for another amazing episode this week. I know the viewers have enjoyed it, and I have as well. To our viewers at home, the number to call is on your screen. That number is 800-779-1942. We know you have a lot of questions about how to plan your perfect retirement. Eric and Joseph are offering you a complimentary consultation. Again, thank you for watching Retirement Talk with Eric Kearney. My name is Cynthia DeFazio. Be safe, be happy, and be blessed. We'll see you back 1 week from today. Take care now.
Hey, Southwest Florida, thank you so much for watching today's show. If anything's resonated with you today, or you're really looking for that second opinion, give us a call today. If you're serious about your finances, we're serious about working with you.
Remember, you only retire once, so let's get it right the first time. Have a great week and an even better retirement.